Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Market Strategist with StickyTrades. And before we get into the analysis, I just want to remind you that today, being Wednesday, we have a rapid fire stock analysis session from 6 to 7 p.m. If you're brand new, make sure you go to your member page, click on the rapid fire link, and that will get you to the Zoom call that begins right at 6. Now, at 5:45, I signed in early so our members could type in their ticker symbols and get put on the list for having their stocks analyzed. Now, before we get into the close, because we're about 2.5 minutes before the close, I just want to show you again what's happening intraday. And I did this last week, and a lot of our members found this to be a good benefit. You can see that we're not seeing a big bounce on any kind of short covering into the close. In fact, we're seeing a slight bounce to this roll reversal resistance up here. But look at the stochastic and look at the CCI coming into the close. They are overbought. And if you look at the SPX, which is the S&P 500 ETF, you could see the same thing, just a little bit of a bounce intraday, but overall, we're not seeing any kind of a short covering rally. Now, finally, before I get into the overall analysis, make sure you go to your member page right here. Again, click on the Rapid Fire Wednesday right there, and that will get you to the Zoom link for tonight's session. Last week, we did 70 stocks analyzed in 60 minutes. Now, I'm not trying to set records here because it could get to be to the point where it's too fast and we're missing out on the trading checklist and the points that we cover there. But that is something you don't want to miss. Now, as we come into this close, remember, I am reminding our members to look at the 52-week high-low list. Coming into the Wall Street Journal, you can see that the New York Stock Exchange has 26 new 52-week highs, but look at that. We have 250 new 52-week lows. Going to the NASDAQ, you could see that we have 29 new 52-week highs, but look at this. We have 300 new 52-week lows. So that is, again, known as the breadth of the market. Make sure you go to the Wall Street Journal 52-week high-low list. You could bookmark that and use it intraday, especially if you use spread traders out there. If you want to get an idea of who's controlling the market, whether it be the buyers or the sellers, then that will absolutely help you as a tool. Now, going into DIA, there we go. We have the official close of the market. Let me go to the daily chart right here, and you can see that we have this big red candle on higher volume. Look down below. We have a cross of the sell signal there on the CCI with the stochastic right there hinging lower. My downside target from last Friday's weekly market report is still in place at 334.09. I'm hoping we could keep this winning streak going into 8 weeks of hitting targets week after week, and we'll have to see. 2 more days left in the week, and with the selling pressure coming in today, there's a high chance that we will see those targets being hit. Now, if we go to IWM, you might remember that I said we could see a bounce. And I actually, this was the only ETF that I said we had an upside target on, and that was 170, 172. So we did that right out of the gate this week on Monday. We came right up and hit that upside target. And so from here, I'm not going to draw my target lines right now, but from here you could see, as I zoom in, we have a lower high and a lower low right at that 20 period moving average. So throughout the rest of the week, I think we're going right back down. And I think that we will take out the low from last Friday, maybe even take out the lows from back here on October 6th and even on October 4th right here. It's a possibility, but remember, my target lines are going to be drawn and embedded on the charts this coming Friday after the close, so stay tuned for that. Looking at QQQ, you can see this is the tech sector. We are now approaching that target price right there of 360.65. I think we will hit that, maybe even do it as soon as tomorrow. But look again, I said that we were battling the number 5 fan line right there, and today we closed below it. If we close below that 20-period moving average, then the fan line and the moving average will then revert back to resistance. And that is something that the bulls need to be very mindful of, because if we stay below that resistance, guess what? The moving averages are going to continue to trend lower after that. Now, SPY, taking a look at that, what do we got? Very close to hitting that downside target. It's still in place at 426.67. Oscillators are pivoting lower. We have an increase in volume on this negative candle today. So again, that downside target is still in place at 426.67. Looking at the VIX, and this was a two-parter. Remember that I said we would most likely drop first early in the week. We did that very quickly, hit my downside target at 1869. Now we're in the run to take out that upside target at $20.71. That is also a possibility because you can see the momentum indicators are still moving higher. I did mention that I would mention SLV from time to time. I said that my buy area is going to be down here at this gap fill. We have a pretty significant red candle on SLV. The CCI and the stochastic are starting to hinge, with the stochastic showing more of a pivot point than what we have here in the CCI. But again, down at that moving average, right around that gap fill point, is where I will be looking to buy more or buy back the silver that I had sold earlier last week. Now remember, this is the day that we go over the rapid fire. If you're brand new to Sticky Trades and want to plug in, just go to our website. You still have a lot of time to go and join up, and you'll get the link for the Zoom call. So until then, you have a good rest of the day, and I'll talk to you later tonight. So long.